give us a progress update on where BPNG is with the sandbox. My understanding is that you're almost ready to go. There's a sandbox that's been built for the central bank in PNG, and that you're about to open the doors on participation. So where are you on that journey, and what's the focus of the central bank's sandbox?
Okay, probably easy to start with the focus. The Central Bank of Papua New Guinea has one of its strategic pillars in its strategic plan, financial inclusion for all PNG citizens. Quite early in the piece, when we were tasked by the somewhat forward-thinking Governor Loy Bakani to look into emerging technologies, one thing we came to the conclusion very quickly was that identity was key to everything, particularly in a country where less than 5% of the population have a birth certificate, less than 80%, only 20% of the population have what means power, and the internet is sparse, to say the least. 74% of people have got SMS-capable phones, but less than 5% have got smartphones, which gives us kind of an interesting eco-space to put solutions into. Cut a long story short, we got into looking at blockchains, we got into looking at identities, for reasons which I'm sure will come out during the course of this brief session. We got into looking at sandboxes. We have to give a progress report. About 8 weeks ago, we did our final presentation to our executive committee at the bank, which is the governor, the deputy governor, and 2 assistant governors. And basically they said, we've read everything, we've seen your pack, we've seen the application forms, we've seen the criteria, go do it. After you've done some socialization. So since that time, we've been focusing on giving an overall presentation of what the sandbox is, how it's going to work, what the criteria are, who's going to be eligible, etc., etc. What are the principles and the criteria behind entry and conduct of the testing in the sandbox. And we've given that to the National Payments Council, or the PNG National Payments Council, which is all the senior executives from the institutions which are subject to bank regulation. We've also done it to our internal supervisory and regulatory teams, the policymakers and the rule makers. We just finished doing the same presentation to all the second-tier banks, the second-tier insurance companies, and so on and so on. And as soon as we get back from Manila, I'll be running the last of those, which is the same presentation to all the fintech developers and the universities and the technical colleges on where they can take part and what are some of their options and what are the rules of engagement. And 2 weeks after that, if not before, we will be having a short cocktail party, and the governor will make an announcement that the Bank of Papua New Guinea's regulatory sandbox is open for visitors. And I can tell you, after 2.5 years, I'm going to be so pleased to hear those words.
So if people want to cocktail party, they come and see you.
Yeah, come and see me with a lot of money for an aeroplane ticket.
Okay. I'm going to jump down to the end of the panel. Peter, I want to pick up on you immediately because nice contrast. If Callum's effectively about to help with the launch of a regulatory sandbox, your AFIN sandbox concept is more focused on a private sector enablement area, yes?
Right, that's correct. And maybe you could switch to the background pictures. I want to just quickly check, who has heard about AFIN or APEX? Okay, so that gives me a good reason to talk about it a little bit. So
the rest of you can go for the next 20
yes, okay. So very, very quickly, the background to this started about 3 years ago, and it came out of the fintech drive in Singapore, where a lot of focus, as you may know, a lot of focus was put on incubators. Fintechs were brought to the table, and you know, as that was happening, it became apparent that there are a lot of struggles for fintechs to actually effectively get their stuff live at banks. So we started to look at that problem, but the bigger context of the problem and why we started this is to look at the bigger opportunity. I think outside I saw the drawings after one of the sessions here. It talks about 1.7 billion unbanked people worldwide. In Asia, that's about 1 billion. And it's a huge opportunity, but it's also a huge challenge. The reason that it has not happened yet has various causes. One of them is clearly bringing down the cost of the technology so it can reach people. You need to make products that are cheap enough so you can still make money, but you can also reach out to people. I mean, you mentioned about telephony or accessibility of smartphones, etc. Over the last 10 years has dramatically grown, but the access to financial services has lagged far behind. In some countries, you have 100% penetration of smartphones, but 30% penetration of financial services. And I think in the Philippines, where we are right now, is a good example of that. So why are these banks not moving fast enough is kind of the problem that we started to run into. So it's not the fintechs, they're there. But what is kind of the struggle point? And the key thing is that if these banks are not going to go digital, they're going to definitely become irrelevant. I think over the coming 5 to 10 years, that's going to play out unless you digitize. So I'm actually from Tokyo, but I'm originally from Holland. So I'm going to show you one or two pictures on this screen. I'm not sure if any of you recognizes this car. If you're from Europe, you very likely will recognize this as an East German Trabant. It's a car that had a delivery time of 15 years. It had a maximum speed of about 40 miles an hour. Now imagine that you're in East Germany before the wall fell. You wouldn't know that there was anything faster. You wouldn't know that the cars normally don't break down. Everybody would be comfortable with each other. If you think about incumbent banks, in many cases, this kind of feeling that is there. We're all kind of in the same pool. We all, have our old mainframes, our old technology. We're branch-based, but we're not digital. So that kind of is combined. But if you're all the same, what's the big deal? Well, and by the way, if you don't know what a Trabant is when I arrived here yesterday, I found the Philippine equivalent of the Trabant, which is the Jeepney. And I don't want to go make it too long, but if you read on the Jeepney story, they're being replaced in the Philippines by a new version of the Jeepney, which is a beautiful white bus with air conditioning and all kind of other goodies. And I think the original Jeepney owners are telling everybody that that bus is not good, stay in my old bus. So recognize the pattern. So if we look what's happening in the industry, there's a lot of disruption happening in Asia. I'm quite sure many of you have heard about the Grab story that started, as an Uber business, but now has a whole financial network built around, small SMEs, etc. So this is how those disruptors look like. So they are the Teslas of our age. They're 100% digital. They do not have any constraints to move very, very fast. There are regulatory constraints, but they're very, very creative in making sure that they work within those constraints, but they're starting to chip at the bigger problem of financial inclusion. And then let's look at the fintechs. This is basically what happens to fintechs. We did a survey among fintechs in Southeast Asia over the last couple of months. And to keep it short, the net is that it takes up to typically 2 years for a fintech to sell something into a bank. Most fintechs end up not getting the deal after waiting for 2 years, etc. So very slow processes. Yesterday somebody explained to me a new way to explain why it takes so long. He says, Peter, you know what? We're waiting 2-3 years because we want to see if those little fintechs are financially stable. Well, guess what? Good luck with that. A lot of fintechs actually find it very hard to sell to these banks.
Can I just ask a question,
Yes.
Peter?
Yes.
Sorry to interrupt.
No.
Can I just check? How many people in the room are from a big bank? I know you're going to be shy to
It's okay to be part of a big bank.
But okay. How many people are from jeepney companies? How many people are from fintechs? Just want to understand how much of the audience we're alienating as we go through Peter's presentation. Okay, so, all right, okay.
Right. For all the others of you, this is probably a very interesting journey by now. So what we're focusing on is the problem, how do we accelerate that process between fintechs and banks? So this is a very simplified version. On the left you have the Trabant, on the right side you have the Tesla, in the middle you have our millennials building all these wonderful fintech companies. So Afen is a platform that brings these together. And in essence, what it does is it allows fintechs to publish their technology as APIs. It allows banks to come in and take those APIs and on the platform in the cloud actually start building their prototypes. It does a few things. It takes away a lot of the hurdles that are built into banks' processes to make sure that it never happens. And by doing that very quickly, we can go from, let's say, a couple of years to a couple of weeks to get things things built. Also, you can test things really quickly. If you have to wait 2 years to find out that something is not working, you lost 2 years of time to market, etc. So that's really what we do. And before I hand it over, if you're really interested in this and you happen to be in Singapore next week, we will be there we can show you a demo if you're really into this. So thank you very much.
And if you're a fintech and you're looking for insurance, you can talk to Peter afterwards as well.
Indeed. You will be insured on the platform from being crash victim.
Bram, you're, as I understand it, going to help me on a couple of different levels. Firstly, you can round out by bringing us a little bit more back to a Pacific focus, given your recent area of particular focus, but also how the donor community can be looking at these sandbox developments and how we should be looking to take these forward, particularly in emerging economies as they're looking for the tools to deepen and further the fintech journey.
Thank you. So yeah, at the risk of because Callum also comes in with a particular angle from the Pacific. Same for me. As earlier stated during the introduction, I work for a UN Capital Development Fund, which managed a program in the Pacific called Pacific Financial Inclusion Program, which in a sense looks at the Pacific market and nudge different stakeholders in the market to spur the agenda of financial inclusion. And obviously, in the last, say, 5 or even more years, most of these innovations in the market are digital. We work with central banks as well as private sector. I dare say that most of the resources that we deploy in the markets are with private sector. So think of insurance providers, mobile network operators, banks, microfinance institutions, you name it. And then we go about in nudging those players to be more innovative and develop services that for people that are typically unbanked or underserved in those markets. And we do that in the, let's say, the bigger countries in the Pacific, and bigger meaning those countries that have a central bank, Papua New Guinea being one of them, but we have representatives of Fiji. We also cover Vanuatu, Solomon Islands, but we don't do, for instance, Tokelau or Niue, or those countries that don't have a central bank. Now, the types of interventions that we have been doing over the course of, let's say, a decade, they are typically working with incumbent players, the likes of what I just mentioned, the insurance providers, banks, sometimes on a project basis, sometimes through technical assistance, sometimes through providing grants. But more and more, we started actually looking at a different approach, and we nudged them through actually trying to move them from within. And we have quite a number of our partners we've set up an innovation lab within those organizations, and to develop new types of services for the markets that are underserved. Now, I dare say some of those labs have been quite successful, but as a development partner, we do take risks that probably the private sector would not take. So there are also quite a number that I dare say have failed, and we have to acknowledge that. But that's, I think, the role that we play as a development partner. We want to take risks and nudge the market in the direction that they otherwise would not go into. But more recently, and I think that link it to the discussion here today around about regulatory sandboxes, is that we look at also nudging the market and working with fintechs. And now, if you look at the spectrum and the, let's say, the landscape in the Pacific, ironically, sometimes you would call it a desert, because there's not much in terms of fintechs happening. Papua New Guinea may be a bit of an outlier, Fiji as well, because these are the countries that are slightly bigger, more advanced markets. But I dare say that in a country like Solomon Islands or Vanuatu, you can count them on one hand, if at all. And So added to that, if you look at some of the central banks in the region that have, I think, compared to many of the central banks that I've seen, for instance, working in Africa or Asia for that matter, the central banks in the Pacific have very much an open door policy. They're very receptive to innovation. And that then beats the question, like, okay, if we already have, informally, they have an open door policy, like, why would you fix something that is not broken? And aren't there better ways to deploy for us, as well as governments, to look at what are the policy measures that we should be putting in place, rather than formalizing something that is informally already happening?
In case anyone wants to judge me harshly, when I've got the anti-sandbox guy sitting between the two people building sandbox, he sat there himself. I didn't set that up. Just my.
We're going to throw some sand in his eyes.
So, if I understand correctly, the question, Bram, the conceptualization is, if we're trying to further innovation and we're trying to particularly further access through to the regulator, why sandbox, right? And surely that's just adding to the workloads and the requirements, and what is it actually going to bring, yes?
Yeah, correct. Yeah. I mean, and again, I cannot speak for, let's say, the Asian context. I mean,
I can. We ask that
Yeah.
question all the time.
Yeah.
Why on earth would you do a sandbox? Yeah, fair question. Okay, so Callum, why? What does success for PNG look like for the sandbox? What do you think success is going to bring to us with the sandbox?
Well, let me start answering that question by giving you a little bit of background. We ran this very first ever blockchain conference in Port Moresby. We had 240 people turn up, most of the government department heads, most of the trading companies, oil companies, so on and so on. We had speakers from about 9 different countries around the world. It was deemed to be a roaring success. Over the following few weeks, I accidentally, and sometimes by design, was in the right place at the right time, had conversations with senior members of the various banking and financial institutions, and every one of them said to me in almost exactly the same words, that blockchain stuff is fantastic, but we're not going to invest in it. And I said, why not? And they said, because you can't tell us the rules. When you can tell us what the regulations are going to be, we'll invest in new technologies, be it blockchain or something else. But we are not going to risk our banking license until such time as you can tell us what the regulations are going to be. Our response was, if we can find a way in order that you can be safe from the regulations as exist today for a certain period whilst you test your solution, and then revert to the old regime of being required to meet the regulations once you have a solution, would that make you more willing to invest? And they said, absolutely. So we moved into, I think we need a sandbox. It's only going to be that because, in the words of our Governor, Roy Bacani, ignorance is not the basis for good governance. The central bank, as a regulator, has to understand this technology if we're ever going to be able to regulate it, let alone understand the pitfalls and the benefits. So we went on a journey to understand about not just blockchain, but understand sandboxes. And thanks to, a large part, thanks to ADB for helping us, and sending some of the technical experts to help us put this stuff together, but also we came to the Central Bank of the Philippines, who, whilst they, at least until recently, don't talk about having a sandbox, they talk about having a learn and grow environment. To be honest, I think it's a sandbox, if by any other name. If they're offended by that, I don't wish to offend, because I'm going there tomorrow with the team that we've got here to do an update for them as to, hey, you guys were so good in helping us get started. We want to show you where we're at before we launch in 2 weeks. And also, we want to learn from them what they've learned since. So the answer to the question is, if you're having a sandbox dumped on you because it's a thing to do, then that's wrong, in my opinion, our opinion. if you're building a sandbox to address an issue, and the success issue for us is products and solutions coming through that enable financial inclusion to become a reality, products and solutions that will lower fees and charges to make entry into the financial system easier, cheaper, faster, quicker, and more assured, and also enabling people to join the financial sector who would not normally be eligible, which is really bringing me back around to the digital identity piece, because in a lot of cases, those 5% of people that have a birth certificate, the other 95% don't. And the only way they've got to prove that I'm Callum Holmes is a letter from the chief in my village. Well, how easily forged is that? Okay? But that doesn't mean we should, in our opinion, we shouldn't exclude people, which is why when we built our sandbox, we first started off with a series of principles around things like fairness, transparency, equality, proportionality, those kind of words. Said, right, we'll build a sandbox based on criteria that fit within that set of principles. Let's not do the criteria and work out what the principles are. Let's decide on the principles and work out the criteria. So because we built something called proportionality into our principles, we said, right, if you've only got a letter from your chief, we'll let you have a bank account, but you can only do this much with it. Maybe $1 a month, $1 every week, 50 cents in and 50 cents out. $1 in, $1 out, doesn't matter what it is. But when you've got a history of saving and saving, properly, then we might give you $2 a week, $1 in, $1 out. That shouldn't be a reason to exclude you entirely because you don't have a birth certificate. Most men and women in Papua New Guinea, they know they've got a baby. It's that thing screaming in the corner. They don't need a piece of paper from a government official to say, you've got a baby. Okay? So the reality is we've got to live with proportionality because we don't live in a binary world. So what we've tried to do with our sandbox is to make it for the common man, but also make it to attract investors and innovators, because we know from our studies and dealing with people like the FCA and the BSP, innovation follows money, money follows innovation. If we can make it as easy as possible to get innovators and investors into our sandbox, meet our principles, meet our criteria, then more will flow. And the twist in that is we won't accept into our sandbox things that A, are not market ready, and B, don't need any form of regulatory relief. If you don't need regulatory relief, what are you coming to us for? It's called a commercial off-the-shelf product. You don't need our permission.
Okay, let's pause there for a second, because I think we've addressed some of that question. I want to give Bram a chance to give any thoughts or responses he may have. But there are a couple of points that got raised, and I see some of the questions coming through. I'm assuming Nigel Fair's in the room, because he's about the only person brave enough to call me a proud Australian. That country walked me out of that country about 35 years ago.
It's the only question that says side to side to side as well.
Sent me out. But the question around Australian examples is worth just picking up on, not least because as we've followed this journey of sandboxes developing, one of the problems that very quickly emerged was the lack of interoperability between the sandboxes and being able to participate across our jurisdictions. And if one of the aspects of sandbox development is to get the compliance and access issues as low as possible so that fintechs and others can start to participate, if the compliance costs go through the roof as you move from jurisdiction to jurisdiction, we're trying to play a scale, we've got problems. And so that gives me an opportunity. I want to move across to the AFIN APIX example, because part of that journey was trying to have some guidelines and rules and then tools about which multiple people, multiple jurisdictions could participate, is at least part of my understanding of that whole issue. And then I'll come back to the Australian example.
Yes, so to some extent actually, the idea behind the sandbox was not to create a platform to actually run production. So it is really to experiment very quickly. So that kind of took out some of the regulatory blocks right away. And I think if you think about innovation, the way if you really want to innovate, you need to actually reduce what I call the cost of failure. And it's kind of a big elephant in the room, but nobody wants to fail. But if you really want to experiment and do things, you need to also build some things like your sandcastle in something else, right? And in a sandbox, you can really rapidly do those type of experiments till you kind of get it right at a very low cost. So that is one side. But we did a few things to make it kind of work across all these countries. So currently, our scope is 20 countries in Asia, except China, China, Korea, and Japan. And one thing we knew a few sensitivities. One is even though it is not a production system, people don't want data to be leaving their country. So the system is designed not to store anything in terms of data. It is in flux. It's always in transition, but there is no permanent store where the data is kept, even though it is test data. So there's other things that play a key role. Look, I'm working with all these fintechs, but when I go live, I still have to explain to regulators that this was the right decision, etc., etc. So we have worked on what we call listing criteria. If you think of a stock exchange, you have listing criteria for companies to be listed. It's very similar to that. So we as a marketplace and a sandbox do not guarantee the performance of fintechs, but we make sure that minimal criteria be met. For example, existence of the company, a certain maturity. Also, we run checks on the so-called APIs. These are live APIs, so you can ping them on the platform. We actually run a 24/7 test to make sure they're up and running. And we have seen that there's quite a few fintechs that can't keep their own system up and running. And we basically tell them, look, if you really want to work in the financial industry, availability and scale do matter. And if you can't do that, you can be listed. But we show that, we show the availability counter on the APIs. So we also allow we don't want to force the companies that are on the platform to disclose everything they can disclose, but they can. If you're familiar with LinkedIn, there is a